Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And boy, do I have a special treat for you today with this video. First of all, I released a video about a month ago covering this article, how this retired military member built up a almost $900,000 TFSA that's generating $11,000 a month. So guess what, everyone? And by the way, this video, most successful video in over 2 years for me, over 60,000 views and counting, all organic views, absolutely incredible. So obviously this is a very, very, very popular video for a good reason, right? It's very eye-catching. But guess what, everyone? Marcus reached out to me, and it turns out that yes, he learned about all this stuff from my channel, mostly about the high yield income stuff. So I'm very proud about that. I had an inkling. So I'd like to thank Marcus, which is not his real name, by the way, but I know what his real name is, but I'm gonna continue using Marcus. He does wanna remain anonymous. But I got a special treat for you because Marcus was kind enough to share his entire TFSA portfolio with us. And I'm gonna unveil it in this video. That's right, you'll be able to see exactly how this $11,000 a month is being generated, and which is going to be very interesting. Not only that, I asked Marcus if he would be gracious enough to give us his top 3 tips. So we'll go through those tips as well. And then I'm going to actually have some advice and criticize or review Marcus' portfolio because I think, and he's looking forward to it. I told him I would do it on the video. He's very much looking forward to it. And I think it's going to be very important, especially if you're Canadian, you're building a high yield TFSA, to listen to these tips because they're very, very important. I've talked about this, the tips I'm going to discuss in a previous video, which I'll show you, but I'm going to touch on it again because I think it's very, very important. So Marcus, if you're listening, I would highly recommend listening to my tips and suggestions at the end. So before we get into that, I just want to give you guys 2 important reminders of the TFSA in general. I've been looking at the comments of this video, a lot of comments, and I've been seeing really 2 things that I want to address right away. So first of all, it's very, very important to remember, guys, that the TFSA limit is on the contributions. That's why they call it a TFSA contribution limit. So I see a lot of comments, how the hell is it possible the limit is $95,000 on a TFSA as of 2024? How could it be has over 800,000? Guys, there is no limit on what the value of your TFSA could be. The limits are only on the contributions, what you deposit, what you put in. Okay, so that's number 1. I remember seeing a guy that just wrote like bullshit in upper cases and whatever. I removed that comment because it's pure nonsense. So again, reminder, guys, and this is more for new investors. You could have an infinite, your TFSA could be an infinite amount. It could be $1 million, it could be $2 million, it could be $3 million. It's the limit is not on how big your TFSA, the value of your TFSA account is. It's the contribution limits, right? So like Marcus, he got very, very lucky with Shopify. Bought Shopify really, really low. It blew up. He made, 10 times his money, and that's why he has such a big amount, way over almost 10 times more than the actual contribution limit. It doesn't matter. The limit on the TFSA is on the contributions, not on how big the account could get. That's very important, point number 1. Important point number 2, and I've been seeing a lot of comments about this as well. People are saying this guy's going to get flagged by the CRA. It's too high. He's going to get flagged by the CRA. And they're going to make him pay taxes on his TFSA. This is absolute nonsense, guys. So I just want to clarify this. There is some sort of gray zone where if you're doing a lot of day trading in your TFSA, which Marcus is not doing, he's an investor, he's not a day trader, the CRA could say, well, you're using your TFSA account for day trading. This is what you do as a job, and we're going to tax you. So this is a very, very, very rare thing that could happen. And I discovered this article. I think this article, says it really, really nicely. Can you day trade through your TFSA? So this is what the article says, Smart Money Manitoba. While you could buy, sell, and hold stocks with the TFSA, day trading or overly frequent trading through a TFSA may be considered a business activity by the CRA and flagged for an audit, okay? Flagged for an audit. It's not like you're gonna lose your TFSA or anything like that. So here's the key. When determining whether a TFSA should be subject to tax, the CRA will examine several factors, including the duration of your holdings, frequency of your trades, quantity of securities traded, time spent on trading, and your intention to hold investments and resell them for a profit. So guys, I get a lot of questions for this. People are scared that they're buying and selling in their TFSA, that they're gonna get flagged. Guys, this is only for very frequent day trading. You're getting in and out of the same stocks over and over and over again. every day. If you're doing a couple of trades a month, you have nothing to worry about. So Marcus has absolutely nothing to worry about. His account is completely fine. It was not flagged by the CRA, and I doubt it will ever be flagged. And even if it is flagged for an audit, let's say, they're just going to check and see, is this guy trading? Is this guy getting in and out? And a quick look at the transactions in the TFSA, Marcus is completely safe because he's mostly buying and holding, right? If you buy a stock and you sell it, that's completely fine 2 months later, 3 months later, even in the same month. But it's if you're doing it every day, frequently, day trading, where you could get flagged for an audit. So guys, if you have a TFSA and you are an investor, once in a while you're getting in and out of stocks, that's completely fine, okay? You don't have to worry. It's only if you're doing very frequent day trading, which I know most of my audience hopefully is not. So those are just two very important reminders for the TFSA from all the comments that I've seen. Very, very important you understand these two concepts from the TFSA. So now let's unveil Marcus's portfolio, the moment you've probably all been waiting for. So Marcus actually has quite a few different TFSA accounts. You can have as many TFSA accounts as you want, really. The limit is really overall, right? So he has basically what he did is he separated them into a few accounts. Some are dripping, some are not. That's up to Marcus' strategy. That's completely fine. But what I want to do is actually go through them and actually just show you what he's holding, right? So the first one, which is absolutely a huge amount here, almost $500,000 in this TFSA account. You could see his holdings here, and there's a lot of stuff you're going to recognize, guys. Here's the percentages. So if we just look at the biggest percentages, you see a big chunk. The biggest position in this one is EIT.UN. You have a nice chunk in ENS here. You also have a really big chunk. Second biggest is HYLD. You got some HDIV, you got some HDIV. So it's really a mix of some split share funds, single stock, niche split share funds, and diversified ones like GDV. GDV is there as well. And things like HDIV, HYLD, all the all-in-one covered call ETFs. So basically everything this channel focuses on, right? So it's actually about 40% in split share funds in here, a mix of split share funds. Some obviously have a little bit higher risk of missing dividends than others, right? You got really low risk ones. In terms of missing dividends, I'm talking about here risk. Things like SBC that has not missed a dividend, only 4 dividends. I think it missed back in 2008. It hasn't missed any. This is actually a big position. You have DGS, which could, but it's a very small position. DFN, a very small position. GDV, my personal favorite split fund on 1.25. Let's see, a little bit of LBS at 3%. You have some real RS, which all middle field split funds have never missed a dividend. So ENS, RS, I would say virtually impossible for them to miss dividends. So here is the first account, Unveil, everyone. So moving on, and remember, after the Unveil, we're going to go through Marcus's 3 tips and my tips for Marcus' portfolio, because I think you'll be very surprised, especially Marcus, at what I'm going to say. So let's move on to another one. This is a smaller one here at 50,000, where you have what it looks like all USD. So this one he's trying to generate USD currency. That's what it seems he's interested in. Just like over here, he was actually kind enough to say the objectives of each account as well here. So you have 11% in CLM, big chunk in SVOL, 18%, massive chunk, biggest chunk in QQQY. So these are pretty much all US listed stocks except for HYLD.EU. That's still Canadian listed, but they're all generating USD currency, 50,000 in here in this account. Moving on to this, the second biggest account, I believe, is 285K. So, by the way, he still has some growth stocks in here. So it looks like he also did really well, not only with Shopify, but a company called Constellation Software, one of the only tech companies on the Canadian market. But besides Constellation Software, again, he has things like SBC, GDV, BKCL, USCL, big chunk in USCL, QQCL here. Moving down, another 10% in HMAX. HDIV, HYLD, some other thing, I don't know what it is, and just a little bit. He still has some growth stocks left over, including some Shopify, and then another small account here with Clip, SVOL, and QQQY, only 25K worth here, but all QQQY, SVOL, and Clip. So that is the unveil of Marcus's TF account, all his TFSA accounts that he has, and combined he's generating about $11,000 a month worth. And I had a strong suspicion, I thought he would have more of QQQY than I thought he would. He has quite a bit, but not an extreme amount, to be honest with you. has a lot of split funds. So yeah, before I do my criticism and my review, very important, let's go to Marcus's 3 tips that he wants to share with you guys that I think could be very valuable. Tip number 1, learn about and never stop learning about investing. Fantastic tip, right? Investing is not going to make you rich overnight, but it'll help you sleep better once you start investing, not trading, right? So he goes on to say there's a lot of links you could check out: financial literacy by the government in Canada, investing, money.ca, retirement planning, money.ca. So there's plenty of great websites out there where you could get some fundamentals, YouTubers as well. So tip number 1, learn and never stop learning about investing. I think I like that because I know there's always something more to learn. Tip number 2, have a flexible investment plan. Gotta have a plan, right? Keep a detailed budget. This was mentioned in the article. So Marcus, from a military background, obviously very detail oriented, very organized, like I am. My wife always says you could have been a good military commander or whatever, because I have OCD with that. But anyway, it's important to have a good plan, keep a detailed budget, right? Achieve your financial goals, know what your financial goals are, execute. We all want our plans to execute as planned, but they could also unfold as worse than planned and better than planned. At times, you may be invested to generate income. Other times, you might want to invest for growth. Other times, safety. So make sure you have a plan and you know your limits. Tip number 3 is, last tip, do your due diligence, right? There's a number of very capable, convincing Canadian financial influencers. But make sure you verify what they recommend you. Always read through the comments, do your due diligence. What is most interesting is when someone changes their opinion about something, like covered calls, initially reluctant to recommend, but become very positive once they learn and understand it. So it's very important to understand what you're investing in, the strategy is. So great 3 tips, fairly generic, but those are always the best ones. So thank you, Marcus, for actually taking the time to provide these. And I have to say, I absolutely agree. So now, what are my tips and recommendations, or I guess general advice for Marcus in this type of portfolio? Well, the first thing I would say is I like it. There's a lot of diversification. There is some overlap here with HMAX and HDIV and a lot of split funds that have financials. So it's actually okay to have a lot of some overlap, right? He obviously likes the Canadian banks, right? He's got DFN, which is, it's not all Canadian banks, but a lot. You got SBC, you got DGS, a lot of Canadian banks there, FTN, financials, HDIV, a lot of financials, HMAX financials, LBS financials. That's completely fine. I mean, you could consolidate and streamline if you want, but it's not necessary. If you like having different type of strategy, different fund providers on the same stocks, that's completely fine. It's not a problem. I like this account here, very strong in the split share funds. Again, make sure you understand how split funds work, right? Not all split funds. I mean, it's 40% split funds. The rest is an ETF. But as long as you understand, my friend Marcus, how they work, that you can miss dividends. Some I've never missed and probably will never miss, like GDV, like all the middle field split funds. Those have never missed a dividend. They're very, very strong unit now. So just got to make sure how they work. And, if this is purely for generating income, you got to look at the history of the split funds and be ready to miss some dividends, like things on DFN, LBS missed a few, but not many. FTN missed a few. So as long as you're aware of that, that's completely fine. DGS as well. Is this one? Let me see. Okay, this is what we live on, right? This account. So yeah, I mean, if you're living off of it, it could suck when DFN doesn't pay out. But what I like is that the percentages are pretty small in the more dangerous split funds that could miss. You have only 3% in DFN. You only have 1% in this one, 3% in FTN, which I don't think will miss for a while. But a big chunk is in RS, 5%. GDV, just a little bit there, but what was the other one where he had quite a bit? ENS, these are really not at risk at missing, in my opinion. So my main advice and criticism will be, and I've talked about this before, he is holding numerous US listed funds in the TFSA. So he has CLM. Hey, some of these are great funds I really like. You got CLM here, you got SVOL, you have OARC, you have QQQY in this account. In this account, is there any? No. And then there's this account where it has CLIP, SVOL, and QQQY. So my number one advice, my only really advice for Marcus is that I strongly believe, I made a video about this, but I'm going to go through it again here. I strongly believe that holding high yield US listed funds like QQQY, like CLM, like SVOL, like OARC, all the ones Marcus has, the high yield US listed, very important to remember, not US stocks, listed on the US stock market. I would not hold these at all in a TFSA, and especially even more so a cash account. And it is really because of the 15% tax. So let me just go through my argument here. And I know a lot of you, I keep seeing this in the Facebook group where, you know, the yield on QQQY, for example, is so high that it's worth it to take the 15% hit. And let me tell you why it's really, really not worth it and makes no sense. First, very important thing you all have to understand as an income investor, probably the number one concept you need to understand as a high yield income investor: yield does not equal return. I repeat, yield is not total return. It's completely different. Yield is the yield, the stock price is the stock price. Together, they make up the return. So let's look at similar funds. Let's look at some funds that you could be very tempted to put in your TFSA or cash account because they have very, very high yield. QQQY, right? NASDAQ 100. So this one here in the last 6 months, and this is a perfect time to do it because remember, when you're comparing returns, you always have to use the same start date and end date. So we're going to use the last 6 months, which is January 1st till the end of June, because a lot of the websites are now updated as of June 30th. So in the last 6 months, the total return of QQQY has been 9.61%. This is actually much lower than a similar competing fund. Another NASDAQ 100 fund, still in the US market, JEBQ, which in the last 6 months has given 15.42% return year to date, which is, you know, in the last 6 months at the same time. You always, again, see, I look at this date here, the dates have to match, which they do. And even if you use this calculator, if you do JEBQ versus QQQY, you will see there's a big discrepancy, right? JEBQ is outperforming QQQY. And I'll use JEBQ as one of the top performing NASDAQ 100 covered calls ETFs on the US market. The Goldman Sachs one, GPIC, is also very good, but it's, you know, it's in the last 6 months, JEBQ is actually outperforming it, which I find very, very surprising, but maybe not. But more or less in line, your JEBQ is, I would say, the highest performer. And again, I'm using January 1st to end of June, January 1st, so 6 months of 2024. So, I mean, I don't know why the total return numbers are different. You see here JEBQ 16.34 on this website, but on the official website, it's 15. Let's just say more or less between 15 and 16% return in the last 6 months. So not only does it beat QQQY, the higher yielding one, for obvious reasons, because the market's been just like the graph shows, right? When the market is very, very bull, the investment writing more covered calls will obviously tend to underperform. So QQQY writes much more covered calls than JEBQ. So of course, if it's a bull market, it's going to have less performance. But if the opposite happens, you know, if the NASDAQ starts going flat or down, QQQY will outperform JEBQ in that period of time. But I'm always thinking about the long term, right? The market, especially the NASDAQ, the S&P, the overall market tends to go up. So my point is here, I know I'm rambling on. Let's compare QQQY, JEBQ. We already did the compare together. JEBQ's much higher total return. Let's look at a Canadian listed fund that's similar. QQCC, this is not even the leverage one. This is the Global X Canada NASDAQ 100. If you look at 6 months, it's more or less similar returns to JEBQ, right? It's about 16. This is not Canadian hedge, so I think the Canadian dollar getting weaker has helped this fund a little bit. But my point is, you're looking at more or less between a US listed fund and a Canadian listed fund that's doing the same thing, right? Covered calls on the same asset, the NASDAQ 100, they're going to have more or less similar performance. Okay, so keep that in mind. The same goes for JEPY, by the way, on the S&P 500, right? Last 6 months, you have 8.48. If you look at another one like NEOS, you have 10, a little bit higher. For the same reason, right? Because they do more covered calls and it's been a bull market. If we just do SPY versus GPIX is outperforming it a little bit as well. You're looking at about, let's say, 13 return, something like that. Let's look at the Canadian USCC. Same thing. S&P 500 with covered calls, no leverage. Look at their return. It's more or less in line, 14.66, maybe a little bit higher. But let's just say, for argument's sake, that basically what I'm trying to say, guys, very important lesson here, is that the Canadian listed fund that does the exact same thing or a very, very similar strategy as in the US listed fund will perform more or less in line. And not only that, the leveraged one, like an HYLD, is even higher in the last 6 months. It's 16 compared to 14.66 of USCC. And by the way, USCL is almost identical to HYLD's performance in the last 6 months. You could see that here how very, very, very close they are. Very, very close, if not identical. So basically what I'm trying to tell you here is that the non-leveraged versions in Canada perform very similarly to the US listed ones, and even more so than the high yielding ones right now. And the leveraged ones do even better, right? So you're much, much better off. And that's not even counting. I didn't even talk about the 15% withholding tax. So you might be saying, okay, Adrian, look, I want to generate USD currency. I'm going to put JEPQ in my TFSA because it behaves or gives me more or less the same returns as QQCC, or a SPY or a JEPI or a GPIX from Goldman compared to USCC. Well, no, you would be wrong, because we didn't even consider the minus 15%. So the return is not 15.42 if you have JEPQ, for example, in your TFSA. It's 15.42 and approximately minus 15%, because there's a 15% withholding tax on the dividends because it's US listed, and still you get that in the TFSA. So you're not getting 15.42, you're getting about 15% less, more or less. It's not exactly 15%, but because these performances are strongly associated with the dividends, right? Let's just say for argument's sake, you're making 15% less. So you're actually making less than 15, you're making 13. So not only are you going to have lower, if identical or lower performance, but even more so once you include the 15%, which is not included here. So you are much better off, guys. Much better off, not in terms of yield, but in terms of performance, which is the most important thing in terms of total return, having the Canadian listed equivalent, whether it's, my suggestion is always the leverage one. So having a QQCC, or my opinion, QQCL in your TFSA, in your cash account, instead of a QQQY makes a huge amount of sense. You'll be much, much better off. Trust me, guys. Or having an HYLD USCL instead of a SPY or a JEPY. Trust me, because that 15% really, really hurts you every single month. This is something that these Canadian ones don't have. And on top of that, in a cash account, it's even worse than the TFSA, because not only you get that 15% hit, but you also have to deal with the fact that they're not as tax efficient as the Canadian ones, right? Canadian ones are mostly capital gains and ROC, whereas if you hold the JEPQ or QQY, there's going to be mostly foreign income. So it's not only you're getting a 15% hit, less performance, but it's not even it's way worse tax efficient wise in a cash account. So whether you're dealing with a cash account or TFSA, guys, please, I'm begging you, this is very, very important, because I still see many of you doing it and not really understanding it. It is really not worth having the high yield US listed funds in a TFSA or cash account. You like them, put them in your RSP where there is no 15% withholding tax. As simple as that. That's why I hold them in there and I don't hold any of them. So for Marcus, and by the way, here's the video where I go into detail about this. I strongly suggest you watch it. I basically lay out the same type of argument. So please don't put the high yield US listed funds in your TFSA cash account. Put them in your RSP. Please check out this video if you haven't seen it. I'll put the link right in the video description below. Oh yeah, and before we finish off, same thing for something like a YMAX, right? YMAX has more or less similar performance as something like a JEPQ, just like you could see here, right? So the same would go for something like YMAX, for SVOL, basically anything US listed with high yield, 10% plus, not worth it, guys. Not worth it in your TFSA and cash account. I feel very strongly about this for the reasons I've laid out. So the problem is, okay, but what if I want to generate USD currency, Adrian? Look, I understand what you're saying, but I want to generate USD currency. The best option by far is HYLD.U, because not only are you getting the S&P 500 with covered calls and leverage, but the .U version means you could buy it and sell it in USD currency and generate USD dividends without the 15% withholding tax. There is no 15% withholding tax with HYLD.U as well, because HYLD.U is still listed on the Canadian stock market. That is by far, my opinion, the best .U version in Canada. Unfortunately, there's no QQCL.U or USCL.U yet. There is USCC.U, but not USCL. So as of the time I'm doing this video, I think HYLD.U is the best option. So my advice to you, Marcus, watching is I would get out of all the US listed stuff you have basically. And if your goal is really because you want to generate USD currency, put it in HYLD.U. That is my number one piece of advice. Yes, your 11K will maybe go down to 9K a month, but your performance will go up because you're just getting hit with 15% needlessly in your TFSA every single month. So go with HYLD.U. That would be my number one piece of advice. And then the cash account's even worse because not only do you get that 15% tax, you're also getting less tax efficiency. So I think, let me just check my notes here because I'm just doing this all in one take. Hopefully this summarizes in detail what I wanted to mention. But a huge thank you again to Marcus for not only sharing your portfolio, sharing your 3 tips. Congratulations on really the hit you got with Shopify. And yeah, phenomenal portfolio, except for that advice I gave you. I will not hold US listed funds in your TFSA. Put them all in HYLD.U. Trust me, you'll be much better off. Not only will you get higher performance even before the 15% tax problem, right? So it's really a no-brainer. So guys, don't forget, again, yield does not equal return, and you're gonna get similar returns with the Canadian listed funds, like HYLD, like USCC, USCL, S&P and NASDAQ, QQCC, QQCL, compared to any one of, there's a million of them, the NASDAQ 100 or S&P 500 covered call ETFs listed in the US. And the reason is really simple. They're investing in the same thing and they're doing a similar strategy, right? So very important thing to remember. So that's it, everyone. Hopefully I didn't forget anything. Let me know if you have any questions or comments, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, PassiveIncomeInvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the Elite membership. If you're interested in the Elite membership, and even if you want to start out with the free membership and upgrade to the Elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the Elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.